All right, everyone. Welcome to today's daily forecast for Tuesday, January 9th, 2024. We've got a lot to talk about, important things happening in the markets. Before I get to that, yesterday, no trades. We did miss out on a platinum short at the 8 a.m. hourly close, which is why I'm going to go ahead and start the live stream a little bit earlier now. 7:30 a.m. Eastern, in about an hour is when we're going to get started. And today's live stream, don't miss it. We're going to celebrate 50 subscribers. I'm giving away a full 25 lesson OMA professional trading course. This course was designed by me over the course of many years. It's got so much information in there regarding Owings market analysis and how to use it. It's priced at $1,500. I would say it's worth a lot more than that when I see a lot of the other bullshit that's out there on YouTube. So be sure to stop by the live stream. I will be doing a drawing if we hit our viewership goals, and you can qualify to win that free course valued at over $1,500. So please stop by the live stream. I'm really excited about that. And all right, with that said, let's go ahead and jump into the trading. We're looking at the NASDAQ. Yesterday, I didn't take any trades. There was that platinum short that, again, I missed because I was just a little late to the stream. But other than that, I was looking at the charts yesterday, and you can see me talking about this during the live stream. And I was saying, you know what? I don't really want to take part in this market right now because something is happening that I don't understand. The market is bearish. That's my forecast, but we're ripping to the upside. And I just decided to take a step back and just not take any trades and just wait and see how the market closed. That's what I like to do when something unexpected is happening. And that's a good way to stay out of a lot of bad trades. So sometimes when you know when not to trade, that is just as important as knowing when to trade. So yesterday, no trades for me. Completely fine with that. Certain days are like that. And what was throwing me off about yesterday was that Friday's sort of almost outside bar here. You had an outside bar on the euro, so the dollar wasn't clear. Bonds weren't clear. The indices here almost had outside bars. So I wasn't really sure what was going to happen. And I wanted to wait and see. And what we ended up seeing was that the NASDAQ here just exploded to the upside. And we're right at this key weekly resistance level right here. This is the S&P 500. We'll get the NASDAQ in a second. So they're both the same though. But the S&P, we fired up to this level, 4,800, right into this weekly resistance level. And now the daily, you know, we broke this extension, broke two of them actually. I mean, that's a monster move to the upside. So right now I'm asking myself, are we going to hold on to these gains today and, you know, continue to push higher back to the all-time highs up here? Or was this just a short squeeze and we're going to dump hard today? I don't have the answer to that question, but I will be observing it closely in the live trading on YouTube today, starting at 7:30 a.m. And if I start to see this market drop, oh boy, I'm going to be licking my chops because the overall picture is bearish. The weekly is incredibly bearish. The monthly, the quarterly, the yearly, they're all very, very bearish. So if this was a short squeeze designed also to suck in a bunch of new longs, thinking we're off to the moon again, if it starts to dump, those longs are going to go, uh-oh, they're going to, you know, shit the bed. And they're going to start bailing on those longs, which could re-accelerate this move to the downside. So we could have a short squeeze up one day and then a re-acceleration on a long squeeze, re-acceleration to the downside today if the longs start getting squeezed. So that's what I'm going to be looking for. I'm not going to play this market from the long side right now. I think it's too dangerous. Instead, I'm focused on the short side. But if I engage the market from the short side, I'm going to want to see this true average here at, you know, right around 47.80. I'm going to want to see that level get broken, hold below that level. I'm going to see what the volume profile looks like, all that good stuff. But the key takeaway here is be careful about chasing this market to the upside. We may head higher. I don't know that answer yet, but it also looks like it could be an exhaust for a squeeze and that we're heading back down. That's what I'm going to be looking for. Let's go ahead and look at the NASDAQ. It's basically the same thing. That's why I thought I was looking at the NASDAQ, because they look almost identical. But here's, you know, you just right up into all this weekly resistance, big move up. I mean, this could be an exhaust for this. We'll see. I'm going to be looking at it very, very carefully today. And I'm really excited about today because yesterday was, aside from that good trade in platinum to start the day, it was just kind of a, you know, a day where I didn't feel like I wanted to put much risk on the table, which is why I left early and went to the gym and had a nice workout and a nice ice shower and sauna. All right, let's look at the Dow. The Dow here is, I mean, Dow didn't rally as much. Nice resistance pattern. I mean, the Dow, I think, is going to be, this is looking pretty good from the short side. So I'll be looking at the Dow from the short side. Let's look at the Russell. The Russell is my, favorite index in terms of weakness. Yeah, we're already heading lower on the Russell. So I think we're going to see a surprising day today to the downside. But again, I need to wait and see, as the market develops throughout the day, which is why we have the live trading stream, so you can see how the thought process is evolving throughout the day. But I'm definitely looking at these markets from the short side today. Very excited. And one thing I noticed yesterday was that bonds were not buying the move. So here, let's look at the 30-year. You can see that as stocks were rallying, bonds weren't really able to rally here, meaning rates were kind of staying stubbornly high. And now bonds do have a sell pattern for today, which means rates could continue to go higher, and that could reinforce our thesis for shorting the stock market today. So I think that's really the key takeaway. I'll leave you with gold and silver here to wrap it up. Maybe a little crude oil. Had a big down day in crude oil yesterday, which is also telling us we could see some weakness in the stock market because crude is, probably seeing a pretty weak economy here moving forward. There's a lot more to talk about. We'll do it in a later video regarding the yield curve and its uninverted, the inversion, which usually is the start of the recession and all that kind of good stuff. But that's all for another video. Here you can see with gold, we're trending down. So gold wasn't buying the big move up yesterday. Because the only reason the stocks rallied yesterday is, the interest rates are coming back down. Fed is going to ease in March. Gold wasn't buying it. Silver, you can see here, wasn't buying it. Bonds weren't buying it. So stocks were kind of in la la land by themselves. Maybe got a little bit of a boost from Bitcoin yesterday. That's certainly possible. But the key takeaway today is I'm still, my short bias is still intact, but I want to wait and see, how stocks react. Certainly bonds to start the day look good from the short side. Gold and silver look good from the short side. Let's go ahead and check Bitcoin. I haven't looked at Bitcoin, see if that was an exhaust in Bitcoin as well. A lot of people were getting super excited about buying this, potential ETF approval. And, we'll see where this ends up going. But, maybe this is an exhaust right here on Bitcoin too, for a reversal back down. I just don't know yet. I don't really trade Bitcoin that much, but I will cover it during the day for everybody who's interested in crypto. And who knows, maybe I'll start putting on some trades. But really, it just comes down to the clarity of the charts. And Bitcoin is pretty correlated, on an intraday basis to everything else. So I'd rather trade more liquid markets. But we'll keep an eye on Bitcoin. I know a lot of people like it. So that's pretty much the summary for today. That's what I'm looking for. I'm really curious to see if the NASDAQ starts breaking below this 16,700 level and holds below there. That's going to be a pretty good sign that we're heading south. And that key level on the S&P, just for all of you ES fanatics out there, the S&P, that key level, I already mentioned it, but let's go ahead and mention it one more time. It's basically right here at 4780, which we're pushing against right now. So we're going to have to see how that level holds up. Again, if 4780 here on the S&P 500 breaks and we hold below there, then I think it's going to be pretty good shorting from there on out. All right, join me in the live stream. Don't miss your chance to win the 25 lesson elite level trading course. And I'll see you guys over there in about 45 minutes. Take care.